Welcome to your weekly market recap for September 22nd to the 26th. After a period of consolidation, U.S. stock markets roared back to life, with major indices posting significant gains following a landmark decision from the Federal Reserve. The main event was Wednesday's Federal Reserve meeting, delivering the first interest rate cut of the year. The widely anticipated quarter-point reduction provided a powerful catalyst. Fed Chair Jerome Powell struck a dovish tone, signaling progress against inflation is sufficient to begin easing policy. While future decisions remain data-dependent, the message was clear. The era of aggressive rate hikes is over. The market's reaction was immediate and euphoric. Monday and Tuesday saw cautious, low-volume trading as investors awaited the Fed. But on Wednesday afternoon, following the rate cut announcement, the S&P 500 and Nasdaq surged. That bullish momentum carried into Thursday with a broad-based rally. Friday saw some modest profit-taking, but the major indices held on to their substantial gains, closing out a banner week for bulls. In sector performance, technology was the week's biggest winner, with the sector jumping over 4%. Communication services and consumer discretionary also posted strong returns. On the flip side, defensive sectors like utilities and staples lagged, along with energy. Individually, Nvidia surged over 8% after announcing an expanded partnership with OpenAI, cementing its AI dominance. Other mega-caps like Microsoft and Alphabet also rode the wave of optimism. However, some analysts point to underlying concerns. Narrow market leadership persists, as the equal-weight S&P 500 showed much more modest gains than cap-weighted indices. As one strategist noted, this divergence is a yellow flag. A healthy bull market needs broad participation. Furthermore, the rally has pushed tech valuations to levels not seen in over a year, raising questions about sustainability. Looking ahead, the focus shifts to Q3 earnings. Companies will need to deliver strong results and guidance to justify their elevated stock prices. Upcoming inflation data, like the next CPI report, will also be critical, as re-accelerating inflation could challenge the Fed's dovish pivot. Geopolitical and domestic policy debates also remain wildcards. For now, the market balances the tailwind of easier monetary policy against the headwind of stretched valuations. As always, keep learning. See you next time.